All right, folks, part two is the creation of the statement of retained earnings. Now, I already have it laid out here. And notice what's going on. We've got our beginning retained earnings, what we started the month of December with. And this amount right here is this $4,000. What we're trying to figure out is what is our retained earnings at December 31st, because all of these other balance sheet accounts up here are at December 31st with the exception of retained earnings, and we need to get it to what its December 31st amount should be. So we have net income that we have created, these profits that we have created, and we calculated that in our income statement. So that flows into this statement of retained earnings. So the sum of these two is the amount that we have to use, play with. And we had dividends, this amount right here. Now dividends, as you remember, they are not an expense, but they do represent outflows of assets. And so I want to bring that in as a negative amount, just so it's clear what we're doing. This is what we started the month with. We added to owner's equity with this net income, the difference between our revenues minus our expenses. So we've increased the equity section by $5,800. We have paid out to the owners $1,000. So we got to figure out what we have left in retained earnings, and you've probably already done that math. And we have $8,800. That is our ending balance in retained earnings for the month. All right, stay tuned for part three, where we get into the balance sheet, wrapping all of this up.